Good afternoon everyone.
Good afternoon, ma'am.
And so let us discuss about cash flow statement, right? Cash flow statement means, this is one of the statement or financial technique or tools of a business to analyze the balance sheet of a company, right? Many tools are there. What are the other tools or techniques?
Comparative
Common size, ratio analysis, trend analysis, cash flow statement lastly, right? So to using this cash flow statement, we can analyze the company's balance sheet and different types of activities, right? Different types of activities, cash inflow and cash outflow of a business, okay? Using this cash flow statement, right? And in this, there are three types of activities are there. That is
operating
activity,
investing
activity,
financing
activity, right? From these three activities we can assess whether the business is going like a positive cash flow or negative cash flow. Okay, cash and cash equivalent, we can assess the company's cash and cash equivalent. Do you have any idea about cash equivalent? What is mean by cash equivalent?
Which can be converted.
Readily convertible into
cash.
The items which are readily convertible into cash, which is known as cash equivalent. Can you say some examples of cash equivalent?
Cash at hand, marketable securities,
commercial paper, then treasury bills, right? And so these are the cash equivalent, readily convertible into cash, okay? And first one, operating activity, which is operating activity means which is all related to production activities or manufacturing section. How much cash inflow and outflow during that production process. Got it? So that we need net profit before tax. Got it? To calculate that operating activity, what we have to identify? First we have to identify operating profit. Okay? So for operating profit, we need net profit of the business. Right? So using that net profit, already deductions and additions will be there. Okay? So what are the additions along with the net profit during this operating activity time?
non-operating expenses.
Non-operating expenses, right? And non-operating income, what we will do?
Deduct,
right? And what is the reason for adding this non-operating expenses and deducting the non-operating income?
To get the operating profit.
To identify the operating profit, because we want to find out the operating generated or used cash generated or used in operating activity, right? And what are the non-operating expenses?
Depreciation, loss on machine and sale of machinery,
goodwill amortized,
right? And what are the non-operating income?
rent,
gain on sale of fixed assets,
gain on sale of fixed assets,
interest received,
right? After interest received, we have to find out the working capital changes. So the working capital changes means it's all related to current assets and current liabilities, right? And so how we can treat the working capital changes along with the operating profit? So we have to add the decrease in current assets and increase in current liability. Then afterwards we should deduct increase in current assets and decrease in current liability. So when we complete that process, net cash generated or net cash used will be available during operating activities. Okay, so now let us go one more time. Like to find out the operating activities, first we want to find out net profit. For that we can use the proposed dividend, interim dividend and provision for tax, general reserve, etc. and after that we have to add that non-operating expenses and deduct the non-operating income, so that we will get operating profit. So from that operating profit, what we have to do, we need to find out the working capital changes, so that we will get the net cash generated or net cash used from operating activity.